I have already. Share करूँगा. ये कोई बात नहीं है. Can I say all the members are available now? Cannot see them. Oh, you are at home, right? Not a lady. Cannot hear. Okay, no problem. Marks attended. So that I will choose 3 people. 006, 010, then 17. Right. 17. Then how about 16? Online. 16 online. 22. Right. 61. Right. 67. 85. Right. Yes. Now timings 15:39. You can take 15 minutes. 49. 54, right? 54 and 15:50 again. 3:54 at the time. The 3 members can discuss and organize the presentation. 3 members. Did you mention 3 members first? Yeah, I told 17, 16. Other members can see. Okay. 18. start. Yes.
Good evening, everyone. We are group number 5. Today, we are going to explain IFR 13 fair value and measurements. So, these are our team members. This is the table of contents. So, introduction about IFR 13, IFRS 13. So we choose United Motors Lanka PLC, and we have done interview with Mr. Nimasha. He is the AGM of this company. So United Motors Lanka PLC was established in 1945 and listed on Colombo Stock Exchange in 1989. So it's a leading player in automobile distribution. And distribute Mitsubishi's JMC Fushos. And the vision is of this company to be the best company in Sri Lanka through diversification while maintaining the leadership position in transport industries. And their revenue of last year 25.2 billions, and they won the Gold Award in the automobile sector at the PHGS Award Ceremony 2023. Overview of IFR 13. The objective of standards define fair value sets single framework for measurement and disclosures, and the scope of standards applies when the other IFRS requires of permit fair value measurements. So these not apply. Share-based payments, lease transactions, certain measurements under IAS to IAS 17. Definition as standards, the price that would be received to sell an assets or pay transfer a liability in orderly transaction between market participants and the measurement scale. Disclosures must disclose information that helps users access valuation techniques and input use, and its aim is transparency in fair value estimation and risk assessment. The related standards are IFRS 9, IAS 60, IAS 14. Next one is fair value hierarchy. There are 3-level hierarchy on input observability. Level 1, ordered prices in active market for the identical assets and liabilities. And the level 2, inputs other than ordered price observable directly or indirectly. And level 3, unobservable inputs based on company assumptions. The purpose are improves consistently and comparability in fair value assessment, and users can understand uncertainty involved in measurements. Levels in practice and United Motors users in level 2 usages. In United Motors use level 2 for determine freeholder land fair values based on the market comparable averages, and in level 3 use where observable inputs and unavailable. For example, internally projected cash flow for the real asset. transfers between levels and disclosures. Transfers, these are the must disclosures. They can reason for the transfer between levels, policies for the determining of classification changes. In para 93C of standard, regulation of opening and closing balances for level 3 measurement. In para 93, disclosure sensitive of level 3 value to change unobservable input. In United Motors, they using no material transfers between level reported in 2023-24. Disclosure include valuation techniques, input, their value sensitive narratives. The next one is valuation techniques and inputs. There are three types of approach: market approach, income approach, cost approach. Use of observable and unobservable inputs. Observable inputs: quoted market price, published NVS, market rentals rates or sales comparable. Unobservable input: internal estimate for future cash flow, discount rate such as WACC, adjustment students, and forecasted rental rates. Further adjustment to inputs and techniques. This is the valuation report of United Motors PLC. And it's will be presented by quantitative process for the range. There are three levels measurements. The overview level 3 inputs are unobservable and reflect the entities on assumptions. Disclosures under IFRS 13 ensure transparency in how fair value is determined. And there are three disclosures requirements. First is reconciliation from opening to closing balances. Disclosures of unrealized gains or losses recognizing profit or loss or OCI. Description of valuation of process units and sensitive analysis for changes in unobservable inputs. And also applications at the United Motors Lanka, you can see the land and investment properties are measured at fair value using level 3 inputs, and valuation performed by an independent chartered. Building values are already reflected at good consolidation level, and valuation, there are two valuation methods: market comparison approach for lands and cost approach for buildings. Reconciliation and unrealized gains and losses. Reconciliation of opening and closing balances. Reevaluate annually and recorded each part. An example of in the United Motors Lanka Limited, their evaluation, gain was million in 2024, and valuation frequency, lands and LCD, annually value, and financial instruments like shares and units values in 1A. Unrealized gains and losses, they are recognized in OCI for investment property and lands, and investment shares, fair value changes go to retained earnings. And there are some sensitivity analysis. Sensitivity analysis in United Motors Lanka not specifically disclosing report
auditors apply analytical index and compare construction cost per square foot year over year and like inputs of several land prices, trading securities, and observable construction costs. Next one is discourse of evaluation process. There are three discourse of internal valuation process under IFRS 13, valuation techniques and tools, level of fair value hierarchy, level 3 measurement and how United is how United Motors adheres to this IFRS 13. So,
Thank you, Mandy. This slide is about the we have Indian finance, so I will then structure. There are disclosures in consolidate how those white fair value is explored for it at least point is valuation frame. Second one is consistent reporting. Third one is that on the consolidated financial statement. And next one is independent verified. And second point is policy for consistency across the staff. First point is single value policy, and next one is standardized policy, and third one is assessment policy, and last one is IFRS 13 hierarchies compares quality. Third point is IFRS 13 guidance and applications and certifications. First point is assess categorization, and second point is lot of valuation techniques, and next point is the cost area harmonization. Next slide is about the challenges and best practices. First one is auditor safety, and second one is valuation expertise, and third one is data limitations and market surveillance. It is evident. Thank you so much for your attention.
Thank you very much for your presentation of the teacher. Right. You have selected United Motors for your company. Right. First question is, what is the justification for the selection of United Motors? Why did you select United Motors? Yes. Yes. Because
he has the impacts and he is also
top 100. Is the top 100? No. That's not relevant for this. IFRS S1 and S2, yes, top 100 need to be identified. Otherwise, there is a ruling, direction given by CH Srilanka. Top 100 company should adopt IFRS S1 and S2 from 2025 on. That's why we ask top 100 for the earlier presentation. But SLFRS 13, there is no such requirement. So anyway, they need to comply with SLFRS 13, right? Okay, other than that, any other justification, second person?
Yeah, and for POC, have most of the commercial properties. So,
Commercial properties.
so land evaluations, they have branches over Sri Lanka. So in that case, it's a land evaluation they are doing. So they are valuation person. So because of that also
Land revaluation.
they are valuation.
Right. That lands were revalued based on which standard? Lands came for which purpose?
They're mainly their properties are investment properties and the unit trust. So they will have with the regional manager. So some of the bank
Lands, you said the investment property, right?
the main thing is investment properties and the unit.
Okay. Now, if that is investment property, what's the related standard that they should apply? What's the related standard for investment properties? In case 40, right? Subsequent measurement. There are two approaches for the subsequent measurement for investment property. What are those two approaches? Yes, next. Fatima. Yeah, value. Then next person. Idea, no idea. Cost model or fair value model. Cost model or fair value model. That's why fair value standard connected with the investor properties, as you were trying to explain. Right. You said the United Motors apply SLFRS 13 for fair valuation. What are the assets and liabilities, particularly assets, available which recognize under fair value? What are the assets? You said lands. You said lands, right? Here. Other than lands, what are the other assets? Here, what share issue, equity side or asset side? Asset side, share investment, fair value. Okay. What are the classification? The share investments, no? What are the classification that they have used to recognize their share investments? Because we were learning and we were discussing them. Okay. Next person. Now she said there are share investments. How they have recognized share investments? What are the classification I'm asking? Next person. Next. Yes, you.
Investments and customer value monthly and other lands and investment properties.
That's okay. That's okay. What I was asking, what are the classification? You went through the annual report now. How they have classified? Huh? Tangible asset. Huh? Nature. Nature. What are the classification? There are three classifications for financial assets. Amortized cost, fair value through OCI, fair value through P&L. How they have classified? Fair value through OCI. Why? Any reason? Huh? Unsure. But you should ask from them, right? Did you identify the assets that they are using, land and interest or something? Financial assets. So this is now when it comes, there are many questions to be asked, but I'm not giving answers. How can I ask question? You defend. Right? Okay. How many members attended? 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7, 8 members. Okay. Right. Thank you very much. Okay. You attended Yeah, you can start now.
They are going to present the standard IFRS S1. It generally poses as general requirements for disclosure of sustainability related financial information. And we are going to choose the first two steps in that standard as given to us: governance and strategy. And these are our group members here. Introduction. First of all, what is sustainability? Sustainability involves balancing economic growth, environmental protection, and social well-being. That's basically known by sustainability. And the purpose of implementing this standard and taking IFRS taking up this standard is the ultimate goal of guiding companies towards responsible and sustainable business practices that minimize environmental harm, enhance social responsibility, and contribute to protecting our planet for future generations. This is the purpose of introducing this standard. And why is Sri Lanka adopting SLFRS S1? And the history goes as this: IFRS S1 is issued by ISSB in June 2023. And SLFRS S1 adopted by CA Sri Lanka in December 2023 and mandatorily effective. That means IFRS will make mandatory for all the companies to use this standard by 1st of January 2027. Till now, it is in a readiness phase from 2022 to 2026. And companies are encouraged to voluntarily disclose sustainability related information. So we have chosen CDP Finance PLC, and they have taken the initial step. And in 2024-25 annual report, they have mentioned a sustainability disclosure there as a readiness phase of there, and they also have their sustainability committee also developed. Step 1, governance. Governance means governance in SLFRS S1 refers to the oversight and accountability structures an entity establishes to manage sustainability related risks and opportunities. This means the standard emphasizes us that a governance body should be kept in order to disclose this information. And the standard also specifies some directions towards that. And the first is defined roles, clear responsibilities for board and management in overseeing sustainability related risks and opportunities, and strategic oversight. That means sustainability must be integrated into companies' core decision making processes when it comes to decision making. And board transparency should be there. Active management involvement in sustainability related disclosures should be there. And reliable systems and accountability and trust. All these points should be considered when it is made compulsory for them, mandatory for them to include the disclosure in their own. As far as CDP's governance is concerned, comparatively, they have taken the initial step and they have formed their governance, and as informed by them, their governance team is overseen by their MD, and they have picked members from each department of theirs as finance, risk, and HR, and all of them. And they have formed a team, and also they informed that they call them Green Ninja, where every branches of them has some representatives in order to handle and communicate sustainability related projects and communications. Strategy I call.
Good evening, everyone. I'm here to do the strategic part. Then when it comes to the understanding strategy requirements of under IFRS S1, the objective of sustainability related financial disclosures on strategy to enable users of general purpose financial reports to understand an entity strategies for managing sustainability related risks and opportunities. Then strategy requirements under IFRS S1 step 2. The first one is sustainability integration into business model. Then the second one is time horizon consideration. Then on that short, medium, long-term impact, sustainability risk and opportunities on the business. Then the impact of financial position and performance. Like clearly state how sustainability factors may affect cash flows, financial position, and future performance. Then the adoption and response plans, like disclose strategies or plans in place to adopt or mitigate sustainability related risk and related opportunities. Then the resilience assessment. Organization must describe how resilient their business strategy is the face of the identified sustainability related challenges, like example for climate transition. Then consist link to enterprise value. Then the consistency with financial statement. So when it comes to the consistency with financial statement, strategy disclosures must align with information general purpose financial reports. The third one is CDP strategy. So when it comes to the CGP strategy, they are using some sort of thing, stuffs. Like the first one is net zero by 2030. Net zero by 2030 means that's the main objective of CGP when it comes to this sustainability. Like committed to achieving net zero carbon emission by 2030. Like on 2030, they are aiming to reduce entire carbon usage from in Sri Lanka. Then they got the first ISO 140641 carbon verified financial institute in South Asia. Then they are collaborating with International Finance Corporation to develop the climate transition plan as well. Then the renewable energy green financing. So when it comes to this scenario, they are promoting solar panels. They are increasing solar panel usage and reduce the electricity bill. Then when it comes to that scenario, they are trying. When it comes to the roof solar panels, they are they have a partnership with CEO reputed company of CEO solar panels. They are providing such kind of packages like 6 years installment, free of charge installment, then hassle-free installments. Then during that financial time period, they are providing a insurance coverage as well. Then they are providing less amount of interest. Then green branches resource efficiency, like they are convert their branches into green branches, like branches being converted eco-friendly operations, then engaged in paper and e-waste recycling, saving natural resources. Then technological innovation. So technological innovation is mainly used GRI, and also GRI stands for global reporting initiatives. Then technology reduce paper use and lower carbon footprint. So it's up to you.
Competitive of the evolution of the SNFRS website and CNSP practices. Collaboration of inclusive model led by sustainability training community and finance risk. Second one is evaluation, social media management and system ensure the sustainability and assessment financial credit. CRM based sustainability project insert traditional CRS stakeholder engagement full of 2027 while mandatory leadership and sustainability finance. Sustainability commitment our CDB finance roadmap toward full compliance by 2027. CDB finance roadmap toward full compliance according to information to had CDB finance digital working and complete framework and confirm to standards, although the public document and present and specific and detailed roadmap toward full compliance 2027 with established milestone regulatory company various accept their strategies. Current indicators are introduction to SLFRS slide. Second one is scope 3 emissions. Third point is ESB audit enhancement, and the fourth one is board level ESG governance, and fifth one is internal capacity building. Conclusion. In conclusion, the influence SLFRS and IFC CDP partners GSC marks clearly a step action company sustainability related discourse, global and asset reporting standards, governance, infrastructure place, CDP finance commitment, transparency, accountancy, and long-term value creation by integrating SLFR and IFRS framework. The company not only address financial and non-financial risk about enhance stakeholders trust to improve the environmental and social and governance reporting. As sustainability becomes the financial performance, CDP finance protective approach ensure the competitive understanding and reward against the dynamic financial environment. Thank you.
Finish. Right. Right. You have selected CDP as your company and you focus on IFRS S1. IFRS S1 balance part, right? What are the main sections that you have focused? Governance and strategies, right? Okay, now what is the readiness of CDB on IFRS S1? Non-presenters can defend here.
They are adapting to the net zero carbon emission project, and they are developed the
So did they adapt?
no, still not adapting. They are adapting. And they develop a team name is Sustainable Steering Committee.
Okay.
They are not
Appointed by whom? MD. Board of Directors. Board level, you know, that special comes from the board.
There are no requirements to get that for the special approach.
But
They are
now,
existing employees are the responsible to do the
okay. Currently, did they disclose based on GRI standards?
Yeah,
Currently,
yes.
GRI standards are there. Then what are the challenges that they were facing when it comes to adopting IFRS S1 particularly? Yes, non-presenters. Are handling the 50%? One of the challenges. Particularly for the SLFRS S1, what are the challenges? Did you participate for the interview? No. Online not there. Online join or not? Okay. Maybe, yeah. No, I was asking challenges of adapting IFRS S1 for CDB. Challenges. Yes. Knowledge gap of the staff.
Yeah.
Okay.
And the electricity vehicles everyone cannot use electric vehicles. Poor side also they are not, so that's a challenge they are identified. And the other challenge is
What is the point? The electric vehicles cannot be used to everyone. What is the main point that you are trying to say?
I'm trying to say it's that they have everyone need to electricity for that one also.
Electricity.
Yeah. No. So it's actually
The electric vehicle.
yeah.
You mean staff members or else customers? Huh? Customers. Now, CDB, you were talking about financing for leasing.
You have also something.
Yes. Now, this is a finance company, right? Converting into what do you call electric vehicles is that they are both.
Basically, they have collaborated projects with Vega Innovations. They are promoting sustainable fossil fuel usage. Their plan is to reduce it.
Yeah, I can understand.
That is it.
Yeah, I was confused. Now she was telling, introducing or promoting electric vehicles. This is not electric, the vehicle company. This is finance company. But if they are promoting leasing facilities for the electric vehicle, something else.
That is starting a project. EV shift. EV shifted for name. They are starting a project. The project goal is reduce the fossil fuels usage.
Yeah,
So
that makes sense. Makes sense.
So the regarding that, sir,
customers don't know.
Saying that charging points are not available within the country and service centers are not available. And also our population, the layman doesn't trust new product.
Correct.
Those are
Correct.
the information.
These are challenges. Yes. Then how did they quantify? You focus on strategies and governance. Now, the quantification also part of this activity. In terms of quantification, what are the challenges that they
As per strategy standards, sir, they said that they are giving low interest rates in comparison. If we take example of fossil fuel vehicles and EV vehicles, if I am going to take a lease on EV vehicles, they basically charge low interest rates.
promote that?
That is a strategy initiative, and through those approved projects, they can quantify.
On that they could.
Yes, they do.
Okay, nice. Overall good. You have understanding what you were doing, but I have doubt whether that understanding is with everyone. That's the issue, right? Few people, yes, maybe read the standard, then who is the leader? How did you allocate activities among group members? How did you do this? How did you do this particular activity?
We had this present interview on 7th
No, the interview from the beginning.
from the beginning, right? So these are our group members. So on that time period, we allocated someone before find a company. Then after she found the
Company,
Found
finding a company. That's the only work that they did. Finding a company.
once you allocated this project, she did that. Then after each and everyone attend to this interview. Then after each and everyone
Who read the standard? Read the standard on those parts. Who read? Huh? But you didn't mention. You should allocate. Yes, this from this part to this part. You are responsible. If there is a question, you can defend. Right? Another thing is now the questions will be given maybe the random selection. Then that particular person should brief what you have learned by reading. Did you get such discussions?
Yeah, we had that kind of discussion. So it means we have allocated there are 8 topics. So we have 8 members. So we have allocated each topics for each member. Then after we get some details, then we go through the annual reports as well. So they will provide the details, and when go through the interview, they ask the several questions according to the
Right. What's your contribution? Huh? Presentation.
Yeah, beginning of the presentations, we
No.
Governance.
Governance.
Governance. KFRS.
Yes, sir.
That's an expectation of.
Right. Did you see any gaps in the field they have not adapted 100%? I can understand that. CDP not in top 100.
they are the Asian, South Asian company.
Top 100. Top 100. They should.
Because they are the first top Asian, South Asian company adopt these reducing net carbon zero in 2030.
Okay. Thank you very much. Next group, please come. So, 4 groups here. How many groups altogether? Seven. Seven.
Let's discuss.
Other people can see, discuss.
I
No 50 you can finish. 50. Okay. Start. Well. Dari ilang baru karena dia. Ada deh.
So we are going to talk about IFRS, the climate related disclosures implemented by ISSB Foundation. Another subject can go under the IFRS Foundation. So mainly focus on the climate related risk and opportunities disclosed in the financial statement. Ensuring transparency and consistency for the investors and stakeholders for taking actions and decisions. There are four main key steps. We are going to talk about the governance and strategy part. Let's get a broader idea about the ISSB sustainability disclosure. So when it comes to IFRS, this one, it's the general requirement standard, and IFRS is to mainly focus on the climate related disclosure. Industry specific requirements, also referred to as SSB standard, tail code, particular sector to address their unique climate risk and impact. And we talk about GRI standard, the Global Reporting Initiative standard. It's similar to ISSB standard, but simpler than ISSB. There are three main types of specific topics: environmental, economic, and social. GRI stands provide a comprehensive guidance for organizations to disclose their broader sustainability impact, not just those affect the price value, but also the social outcomes. About the objective of IFRS S2. This standard ensure entities disclose climate related risk and opportunities that useful to investors and stakeholders who providing resources to entity to get an idea. And this mainly include disclosing how risk and opportunities affect entities' cash flow, access to finance, and cost of capital over the short, medium, and long term. Mainly is expected to affect entities due prospect. And scope limits only risk and opportunities that could reasonably affect the entities prospect within the scope. Anything outside, we don't disclose, and the disclosures must be made on the material. when we talk about material, if it is not material, but the investors and stakeholders request them to disclose for their decision-making purpose, we need to disclose it, apart from the material. So there are these are some factors that relate to scope, scale of climate impact, time frame, potential effect, potential operation performance, impact of future performance, advantage of climate change. There are some companies excluded from implementing IFRS S2 due to they are already polluting environment, and if they disclose this, there may be impact for their reputation.
So now let's talk about the governance part. So the main objective of governance is to help users of financial reports to understand how an entity governs climate related risks and opportunities. Require sources, governance body or individual risk. When the governance body or individual overseeing climate related risks and opportunities. So here are 5 roles that should discuss in the finance table. First one is role and responsibilities. How responsibilities are defined in terms of reference, role descriptions, and mandates, etc. The second one is skill and competence. How the entity ensure necessary expertise is available for developer. And the third one is information flow, how and how often the body or individual is informed about climate related risks and opportunities. And fourth one is strategic oversight, how climate risk and opportunities influence entities' strategy, major transactions, risk and management, decisions, trade-off and trade-off consideration. And the fifth one is target oversight, how the body or individual sets and monitors climate targets, integrates performance metrics into remuneration policies. So what are the management roles in climate related governance? First one is delegation of responsibility. Climate related oversight may be assigned a specific management level, person or committee. Oversight mechanisms include reporting rights and accountability structures. The second one is oversight practices. Senior management supervisor, performance person or committee is responsible for regular views and updates on climate related matters. Third one is control and procedures. Use of internal controls to monitor and manage climate related risk and opportunities. Creation of these controls with existing internal functions. Example risk, finance, operations. Study.
Good evening, everyone. Let me take you through the strategies. For that, here the objective of the IFRS standard of S2 is the climate-related financial disclosure on strategies to enable the general purpose financial reports to understand the entity strategy for making climate-related risk and opportunities. And here, these are 5 areas that the entity must disclose: relevant climate-related risk and opportunities, current and expected impacts, strategy and decision-making, including the transition plans, financial impacts, and climate resilience. Moving forward, next, the climate-related risk and opportunities. The entity must provide a detail to clarify how climate-related risk and opportunities affect the business prospects. So here, they have to describe key climate related risk and opportunities. And here they have break down the risk into two parts as physical risk and transferable risk. And here physical risk we can identify it as the risk which affects the entity directly, like from extreme weather, then natural disasters, etc. And transition risks, those are like the policy changes, then shift in the market preference. Yes. When it comes to business model and value chain, here the entity should disclose the current and anticipated effects, the climate related risk and opportunities to its entire value chain. Which means that they should specifically disclose the current and anticipated effects on assets activities, as well as where the climate related risks and opportunities are concentrated. Then moving forward to this strategy and decision making. Here,
Last 3 minutes.
Here the entity should disclose the effects and climate related risk and opportunities in strategic decision making. Specifically should disclose how the entity has responded to and the plans to respond. Here are 5 changes to the entity business model: direct mitigation and adaptation, indirect mitigation adaptation, climate related transition planning, plans to achieve any climate related targets. Moving forward to
So we conduct the interview. So we conduct the research about loan case holding. We have interviewed Mr. Mohan Tantri, the group finance controller, and got the broader idea about the company and how to implement the standard and what are the steps that they have taken up to now. These standards implemented from ISSB globally from 2024 January. But it's for Sri Lanka. Sri Lanka came up with staggered approach to implement it in 2025. And JPA Holding going to implement it in the implementing first part in next financial year. They have taken some steps over up to now. They have hired a consultant to carry forward this standard, and they have financially and sustainability and governance team to look up to this standard. And they are looking for a person who can be higher management, the board of directors about this standard. Now they are using the GRI standard because they have multiple stakeholders to get multiple ideas and various information about the company. There are some of areas that they get implemented.
That's it, right? Okay, thank you very much. You focus on SLFRS S2 strategy and governance. Right now, this mainly focus on climate change, risk, governance, strategy, risk management, metrics, and targets. Right. Can you please elaborate what are the challenges in terms of quantification of these climate related risks, the governance and strategy? Can you please elaborate the last presentation?
So in terms of governance.
That's the idea.
So in terms of governance, the board of directors, yes, they are from finance or they are from different backgrounds. So The challenge is to educate them as to how this standard is relevant, and so they can make more informed decisions and basically challenge the team as well to better implement the strategy. So the challenge is basically to get this idea of the standard to the board of directors, which they are currently working on. They are hiring, they are planning or looking for someone to hire some expert to basically educate the board.
Right, okay. Now, what is the, now already they have implemented IFRS S2 last year, JKH, no? Voluntary basis? Voluntary basis in last year? Are you sure?
Yes.
Current year they will be doing. Everyone participated for the interview? Everyone?
The medical.
Okay, then you contacted him?
Yes.
Pictures. Okay. Well dressed. What are the things that you have learned from this vision? This particular activity? Same thing, all these four concepts are governance, strategy, risk management, and business targets. The general guidelines. The most specific on the modification in terms of climate change. Yeah. Right, okay, good. Thank you. You will be presenting that. Other people, 78, 73, 39, 76, 63, 99. Everyone is here, right? Yeah, all present. Right. Okay, other the three presenters, 83, 23, 74, they can organize the presentation, others can see. Oh, yeah, we will. Okay. Yes, you can start now.
Good evening, everyone. We are group 6. We will present SLSRS 7 financial instruments disclosure. These are our group members. These are our table of content. First of all, I would like to say in Sri Lanka, we don't use IFRS 7. Instead of IFRS 7, we use SLXRS 7.
What? Repeat again. IFRS 7. How do you invent the Q? How do you invent a Q? Same thing, IFRS 7 and SLFRS 7, same. Sri Lanka, adapt කරලා ඉතින් ලංකා අපේ ලංකාව independent country එකක් නේ.
About the introduction, SLFRS 7, IFRS 7.
ඉතින් ඕන ගැටුවට IFRS SLFRS.
SLFRS 7 issued by International Accounting Standard Board, adapted in Sri Lanka by CA Sri Lanka. There are some objectives of the standard. First one is the significance of financial instruments. The next one is the nature and extent of risk arising from those instruments. The next one is how the entity manages those risks. The last one is applies to all entities with financial instruments. IFRS 7 applies to all entities that have financial instruments. Encompassing both recognized and unrecognized financial instruments. Recognized financial instruments are financial assets and financial liabilities within the scope of LKAs 39. Unrecognized financial instruments are certain financial instruments that, although outside the scope of LKAs 39, fall within the scope of SLFRS 7. For an example, loan commitments. Contracts to buy or sell non-financial items is our next point. SLFRS 7 applies to contracts to buy or sell non-financial items that are within the scope of LKS 39. When talking about the exclusions from SLFRS 7, first one is the interest in subsidiaries, associates, or joint ventures. SLFRS 10, LKS 27, or LKS 28. Employees' rights and obligations under employee benefits plans, LKS 19, employees' benefits. The next one is the insurance contracts. Defining SLFRS 4, insurance contracts, however, SLFRS 7 applies to derivatives embedded in insurance contracts if LKS 39 requires separate accounting. Next one is share-based payment transactions covered by SLFRS 2, share-based payments, except for contracts within the scope of paragraph 50 to 7 of LKS 39. The next one is instruments classified as equity instruments, LKS 32. Classes of financial instruments, they are group based on nature and characteristics. Categories include financial assets and liabilities at fair value through profit or loss, held to maturity investments, loans and receivables, fair value through other comprehensive income, financial liabilities at amortized cost. Over to you, Justin.
The nature and the extent of a risk. SLFRS 7 requires both qualitative and quantitative disclosure of risk arising from financial instruments. There are main three risks. First one is credit risk. Risk that a counterparty will default. Like disclosures of maximum exposure, collateral health, credit quality. Second one is liquidity risk. Risk of being unable to meet short-term obligations. Liquidity risk disclosures, maturity analysis of financial liabilities. Third one is market risks, interest rate risk, currency risk, and other price risk. Market risk disclosures like sensitivity analysis showing effects of changes in market variables. Qualitative and quantitative disclosures. Qualitative disclosures refers to disclosure exposures and how they arise. Objectives. Second one is objectives, policies, and process of managing risk. Third one is methods used to measure risk. Next one is quantitative disclosure, summary data about exposure to risk at reporting date. Second one is concentration of risk. Third one is sensitivity analysis required unless risk is immaterial. Transfers of financial asset. The recognition of criteria. If it is no more as in financial asset, it should be recognized. Continuing involvement risk process, retain risk and rewards. Second one is financial commitments and related liabilities. Offsetting financial assets and liabilities. If financial assets and liabilities are offset, it should include gross amounts before offset, amounts offset, net amounts in statement of financial position. Collateral and other key disclosures. Collateral pledged and received. Next one is default and breaches disclosure. Third one is allowance accounts for credit process. Our company selection is we have selected Union Bank of Colombo PLC. Small introduction of Union Bank of Colombo PLC. Union Bank is a licensed commercial bank in Sri Lanka, offering retail, SME, and corporate banking service with the focus on digital growth and customer service. This Union Bank finance instrument include loans and advances, deposits, cash and cash equivalents, and financial investment, and etc. We have visited to Indian Bank of Colombo PLC. These are the evidences. Over to
So for the next part, let's look into disclosure analysis. So when it comes to classification and measurements of financial instruments, Union Bank of Colombo PLC classified financial instruments based on SLFRS 9, that is fair value or amortized cost. So, when it comes to fair value measurement, Union Bank of Colombo PLC applies fair value hierarchy for financial instruments. It categorizes under 3 levels. Level 1, quoted market price. Level 2, valuation technique using observable inputs. Level 3, valuation technique with significant unobservable inputs. So it provides clarity on valuation techniques, reducing uncertainty for stakeholders. So the risk management disclosures are divided into 2 risks. The first one is credit risk and the liquidity risk. So when it comes to the credit risk, the Union Bank shows the collateral held, expected credit loss allowances, and the information on credit impaired assets. And when it comes to the liquidity risk, the Union Bank provides contractual maturity analysis, gap tables, and liquidity coverage metrics like LCRO and SFR metrics. So this is the market risk analysis. So the first one is sensitivity analysis. This is the changes in interest rates or prices affect profit or loss. The second one is value at risk method to estimate losses under normal market conditions. So the next one is the bank's primary market risks are interest rate risk in the banking book managed via gap limits, repricing analysis, and economic value sensitivity test. The second one is foreign exchange risk managed through matched hedges and net open position limits. The third one is equity price risk on AFS portfolios managed with concentration limits. So all sensitivities and limit monitoring tables are disclosed here and with methodologies aligned to SLFRS 7's requirements. So how does the bank classify and disclose its financial assets and liabilities according to SLFRS 9 and SLFRS 7 in relations? So the first one is amortized cost. That goes with loans, receivables where cash flows are solely principal and interest. The FVOCI debt instruments help both collect cash flows and sell.
Last 2 minutes.
The third one is FTPL, trading derivatives or instrument decided on initial recognition. So for the additional disclosures, the Basel 3 Pillar 3 market disclosures covering capital ratios, RW breakdowns and leverage metrics, GRI aligned sustainability disclosures on risk impacts, CBSL mandated notes on repurchase transactions and also extended fair value sensitivity. So thank you all.
Thank you very much. Right. You have been given SLFRS 7, right? You have chosen Union Bank. Why Union Bank? What is the justification? Why did you say that Union Bank? Please.
Transparency for in Srilanka. The organization, the Union Bank sector 14 rank out of 100. So we believe that
Got 14
rank
rank out of 100 banks. How many banks in Sri Lanka?
we believe that transparency.
Right. Basically, you have selected finance, banking, and finance. There are many other banks. Why Union Bank?
The Union Bank is a only bank in the transparency reporting in Sri Lanka according to 2022.
14th rank.
Yeah.
Then there are another 13 banks. No?
The tax association.
I hope you understood my question. I'm asking there are around 24 licensed commercial banks and the central bank. Why did you select Union Bank? Any special reason? Yes, Mohammed? Mohammed, okay. Hmm?
Same reasons.
Same reason, but not same. No. We have to have proper justification for the selection. Maybe you have selected because you have contracted them, you have got some contracts. That's the, but scientifically you should justify. Did you understand my point? So no one can challenge for the selection. There are another banks, Bank of Ceylon, Sampat Bank, Ceylon Bank. You have not selected this. The real reason is you don't have any contacts. You have selected, you have received some connection from Union Bank, you did it, but you need to justify the selection. Right? That's the expectation of the question. Proper justification should be there. Right. Now, as per SLFRS 7, there are different types of risks. Right? What are the risks that standard emphasize? Yes.
Market risk.
Market risk. Market risk.
Credit risk.
Credit risk.
Liquidity.
Liquidity risk. How this company, right? Union Bank. Union Bank disclose about their risks. This person,
Market risk, interest rate risk.
market rate, interest rate. Did they disclose properly as per the standard? Did you identify any gaps? Standard requirement and the company disclosure gap. Which person will put again first? Yeah, present karane. You presented, right? Okay. This person. Gaps. Did you analyze it? What is the source of analysis? How did you do that? Did you take all the disclosures as per the standard? In Excel? Huh? Mogar daga analyze kare go. I would never know by getting information from the annual report. Hari, then annual report ke tine check karagani ne standard requirement ka. Standard requirement ko mane. In the standard, these are the disclosures to be made available. So annual report ke bala tick karagani. Make it kalada kila. Huh? Did you do that?
We compare the standards and the
Hari compare කොහොමද කළේ දැන් ඒක report මොකද්ද කරා කියන evidence එක මම කියන එක තේරෙනවද දන්නේ නැහැ එතන තමයි gaps ටික identify කරන්නේ මේකෙන් මේ වගේ එකක් තියෙනවා disclose කරන්න but they have not done so there is a gap එහෙම එකක් කියන නැහැ නේ that's the one of main objectives of that activity. Since you have missed that. You have missed that. Okay, thank you very much. Next group. Next.